According to The Guardian, the Metropolitan Police in London has secured a 12-month extension to its pilot project with Palantir, even after London's Mayor Sadiq Khan recently blocked a much larger, roughly £50 million deal with the company. For Palantir shareholders and anyone watching the stock, this is a nuanced development. It is neither a clean victory nor a clear setback, but a mixed signal with important implications for future government business, regulatory risk, and the company's brand. According to The Guardian news report, the core of the story is that the Met had wanted to move from a pilot into a long-term, large-scale contract with Palantir to automate intelligence analysis and to help detect officer misconduct. The mayor's office stepped in, citing a serious breach of procurement rules, essentially arguing that the Met had not seriously considered alternative suppliers and had effectively moved toward a single vendor, Palantir-centric solution. The Guardian mentions that after the mayor's office blocked the big deal, Palantir's lawyers wrote to the mayor's office for policing and crime, indicating an intent to challenge the decision in court. In parallel, the Met has now been allowed to extend the pilot for another year while a new, more open procurement process is run to select a long-term supplier. In practice, that means Palantir's software continues to be used at the Met for at least another year, but there is no guarantee that Palantir will ultimately win the bigger, long-duration contract that investors would care more about. From an investor's point of view, this situation touches several themes that have been central to the Palantir equity story: the company's deep entrenchment in government and security work, regulatory and political risk tied to that, and the possibility of turning pilot deployments into large, multi-year, high-margin contracts. Let's unpack the positives first. According to The Guardian coverage, the Met's senior leadership is publicly praising Palantir's system. The Assistant Commissioner Rachel Williams said that the customer service engine capability has strengthened professional standards, helped root out misconduct, and is improving public confidence. She noted that the system brings together data the Met already lawfully holds, in one place, to identify potential standards, welfare, or cultural concerns. For investors, this is important qualitative evidence. The end user is not just tolerating the software, they are actively endorsing its value in public statements. The Commissioner, Mark Rowley, went even further in his speech. According to The Guardian, he argued that the Met's ability to act is currently constrained by a lack of technology to provide the needed insight. To prove the concept, they created a pilot with Palantir that focuses on integrity problems within the force, bringing data together, surfacing patterns that would previously have gone unnoticed, and identifying potential misconduct or risk earlier. In his words, this pilot has allowed the Met to bring together data on tens of thousands of people across the organization, moving to what he described as a discovery-based model. For investors, that language is very close to Palantir's own marketing narrative, taking fragmented, siloed data and fusing it to reveal patterns, anomalies, and risks that would otherwise be invisible. When a major police force echoes that framing, it strengthens Palantir's claim that its platforms are not easily replaced by generic analytics tools or simple dashboards. Rowley also stressed that they are no longer reliant solely on colleagues raising concerns or victims coming forward. Instead, they can proactively identify problematic individuals or patterns and intervene before harm occurs. That proactive risk identification has been a key selling point of Palantir's Gotham platform for years. For a stock investor, confirmation of real-world usage in a politically sensitive area like police integrity gives the product additional credibility and stickiness. The Guardian quotes a Palantir spokesperson saying they are proud that their software has been used so effectively by the Met to identify officer misconduct, and that this decision will allow that work to continue. The spokesperson adds that Londoners value a force that holds officers to the highest standards and that Palantir is determined to help the Met deliver that. This is not just PR spin, it is part of a broader reputational strategy. Palantir has often been criticized for working in surveillance and security, and those controversies can weigh on valuation multiples. Framing their work as improving accountability and rooting out rogue officers is a way to position the company as a tool for civil rights and good governance rather than only as a spy tech contractor. From a revenue and pipeline angle, the extension means that Palantir maintains a live, high-profile reference deployment within one of the world's largest police forces. For investors, that matters for two reasons. First, continued usage generates some ongoing revenue, even if it is smaller than the blocked mega deal. Second, it preserves Palantir's ability to use this deployment as a case study when selling to other police forces or public sector agencies in the United Kingdom and globally. A full cut-off would have been far more damaging to the narrative. Now, let's shift to the risk side. According to The Guardian, the mayor's office found a clear and serious breach of procurement rules and concluded that the Met had only seriously considered one supplier. This means that even if Palantir's technology is superior, political and procedural constraints can derail or delay monetization. For a company whose bull case is heavily tied to expanding deep government relationships, this kind of pushback is a real risk factor. For stockholders, one key implication is that high-profile, politically sensitive deals can be binary and subject to sudden interventions. The blocked £50 million contract would have likely been seen as a meaningful win for Palantir's UK government business, directly comparable in narrative terms to its big NHS data platform involvement. When such deals get stopped on procedural grounds, it highlights that Palantir's go-to-market motion with public authorities needs to be not just technically persuasive but procedurally bulletproof. The mayor's office has now required the Met to run a new procurement process that is explicitly open to a wide range of potential suppliers. For investors, that introduces competitive uncertainty. Palantir will now have to compete head-to-head against other analytics and AI vendors, possibly including large cloud providers, specialized public sector analytics firms, or even new entrants that promise lower cost or more transparent algorithms. The extension of the pilot suggests that, at minimum, there is no immediate technical replacement at hand that the Met can simply plug in. That is a subtle but meaningful bullish data point. If it were easy to shift this workload to another vendor, the Met and the mayor's office might have done so immediately to defuse the controversy. Instead, they chose to keep Palantir's system running to avoid losing a capability that leadership clearly values. From a risk-reward lens, investors should think about three main dimensions. First, revenue trajectory. In the near term, this extension likely keeps some portion of Met-related revenue flowing to Palantir, though the news article does not provide specific financial figures. The more material impact was always going to be a large, multi-year expansion, which is now in limbo. The bull case is that Palantir wins the new competitive procurement anyway, perhaps even on improved terms, and the deal moves forward later, with a somewhat more robust political footing. The bear case is that procurement rules force a more commoditized competition and the Met either awards the long-term contract to a rival or splits the work among several suppliers, reducing Palantir's share. Second, political and regulatory perception. Opponents of Palantir, especially in Europe and the UK, will likely see this as validation of their concerns about surveillance, opacity, and procurement shortcuts. For the stock, that can translate into heightened regulatory risk, more activist pressure, and additional scrutiny on future tenders. Shareholders should understand that Palantir's core markets intelligence, defense, policing, and health data are inherently political. Strong technical adoption often invites backlash from civil liberties groups and political actors. That can slow down deal conversion cycles and add legal overhead. Third, signaling to other governments. Other agencies and foreign governments follow London closely. The fact that the Met leadership is openly defending the tool's value even after a procurement controversy can reassure prospective buyers that the technology itself is robust and useful. At the same time, the public dispute around procurement can act as a cautionary tale, prompting future customers to be more careful in structuring their deals and perhaps to insist on more transparent and competitive tenders from the outset. Over time, Palantir may need to become more flexible in commercial structure, more transparent about how its models and data integrations work, and more prepared to face formal competitive evaluations rather than sole source, relationship-driven awards. One subtle point in The Guardian reporting that investors should note is the description of how the system is being used. The Met emphasized that the data fed into Palantir's system are ones the force already lawfully holds, and that the goal is to detect potential standards, welfare, or cultural issues. This tries to preempt privacy criticism by saying there is no new data harvesting. However, the power of Palantir's platforms comes from fusing data sources, correlating patterns, and scoring risk. For privacy advocates, that is precisely where the concern lies. Lawful individual datasets become far more intrusive once combined and algorithmically analyzed. From the market's viewpoint, that underlying tension is not going away. If Palantir succeeds commercially, there will be more of these debates, not fewer. The question for investors is whether the revenue growth and entrenched positioning in key institutions offset the regulatory drag and reputational volatility. For valuation, this piece of news alone is unlikely to justify a major revision to long-term discounted cash flow assumptions. It does, however, matter for near-term sentiment. When headlines say that a mayor blocked a large Palantir deal, traders can react negatively, seeing it as a sign that political risk is materializing. The extension to the pilot, the positive comments from the Met, and Palantir's own statement of pride in the deployment all soften that blow. In other words, this looks like a classic Palantir outcome, messy, politically contested, but with the technology continuing to operate at the core of a mission-critical function. Over time, the company's equity story has been built on the idea that once Palantir is embedded in an institution's operating fabric, it becomes extremely sticky. The Met's willingness to fight to keep the capability running, even temporarily, reinforces that view. Going forward, investors should watch for a few signals around this story. 1. The design and outcome of the new procurement process. Does Palantir win, and on what terms? 2. Any legal developments stemming from Palantir's lawyers challenging the mayor's decision. Protracted legal confrontations could sour relationships or delay revenues, while a negotiated compromise could clear the path for a more formalized, defensible contract. 3. Whether similar procurement debates arise in other jurisdictions where Palantir operates, such as other European police forces or public sector clients. More broadly, this case reflects a structural shift in how policing and governance systems are being rebuilt around data platforms and AI-assisted analysis. Palantir wants to be the operating system for those institutions. That ambition is precisely what makes the stock attractive to some investors and unpalatable to others. If you are a long-term Palantir shareholder, this news might reinforce the core thesis that, despite political turbulence, the company's software is increasingly seen as indispensable in high-stakes environments. If you are more skeptical, you might interpret the blocked deal as a warning that political and regulatory friction could cap the pace at which Palantir scales its government business, especially in markets with strong procurement and privacy norms. On balance, the Guardian story signals that Palantir remains inside the Met's operational stack for at least another year, gains further real-world validation of its AI-driven integrity analytics, but faces heightened scrutiny and competitive pressure as it seeks to convert that presence into a large, durable, and politically acceptable contract. For the stock, that combination probably supports the idea of a volatile path toward growth rather than a smooth, linear ramp. Thanks for listening to this episode. If you found this analysis helpful, consider subscribing so you do not miss future deep dives into tech and AI stocks.